Good afternoon. Welcome to Trading the Close. My name is Lawton Ho.
And I'm Drew Dosick.
And by popular demand, your two most handsome members of the Verified Investing Trading Team are back with Trading the Close.
We're back. Yes, time for some fun. All right, so what do you got today, Lawton? What are you thinking about?
So we're going to go through all the charts as usual, go through the heat maps, but we just wanted to wish you all and your families a Merry Christmas.
Yeah, as a reminder, Christmas Eve, obviously. Tomorrow the markets are closed on Christmas Day. We've got the holiday. Merry Christmas, Happy Holidays, Happy Festivus to the rest of you. All right, so we come over here to the heat map. We see what we normally experience on holidays. We have light volume, and we also have a little minor push up. We see the Dow Jones Industrials up 0.62%. The NASDAQ's up 1%, led very nicely by AVGO. You see right here, 2.82% up for the day. Apple and Nvidia are also up. SPX is up 0.85%. Then we have oil is also up. Gold is up, and Bitcoin, look at this nice pop by Bitcoin, up 4% on the day. And if I step back so you can see a little bit more of the heat map, you can tell there's an awful lot of green on the screen here. Again, with the Santa Claus rally, not a lot of institutions are around to go ahead and put selling pressure on the market and bring price down. So we have a lot of smaller investors, retail investors seeing the markets and buying the action. So you see a lot of green on the screen. And then next we want to take a look at the SPX. You'll notice last week that I was highlighting the fact when we did sell down through here on the Wednesday FOMC results. We did sell down a little bit further the following day, but then on Friday we had a massive recovery up. And you notice the following two trading days, including today, we're right back inside this short-term parallel channel. Now what that does is it opens up the door for us to go higher on the SPX, particularly over the next couple weeks, being the holiday weeks and their shortened trading weeks. We have the high pivot here around just under 6,050 that should be tested within the next week. And if we push up above that, this inclining dotted area on the parallel will be the next spot. And if I step back further on the SPX on the next chart, we show that even though this parallel, we're trading back within the parallel, and again, this is still the SPX, the S&P 500, you'll notice that we are in a much wider parallel channel on the SPX. So even with this fall down here, we didn't come down to the support area that likely would have given a longer term bounce. So this, from what I see so far, this is a shorter term bounce, but you notice here we did make a new low, and that's why I've circled this area on the charts. We made a new low. I'll highlight what that looks like on later charts, specifically on Nvidia once we get to that chart. All right, so next on the SPY, you remember last week that I spoke about volume, right? And how whenever you have a big sell candle, or even when Lawton asked me the other day about August 5th, all the way back over here, what type of volume and really what happened during that time frame. So we go back over to the current time, we see we had this massive sell volume right here on Wednesday. Then Thursday we had more or less kind of a sideways day. Friday on the S&P, the SPY, we had a massive volume candle, huge buying pressure come in. So what that tells me now is that this candle is really dictating the price action moving forward. We really have kind of a conflicting story going on here because this big red candle has a lot of power and momentum pushing price down, but then this green candle with a whole bunch of volume is pushing price back up. So I'm going to be very interested to see what happens, and it's about 606 to the top of this red candle. What happens when price gets up here? Do we start then curling over, or do we form a consolidation potentially for another move up? But this area is going to be a lot of resistance on the chart. And then you see here too, I've got this other trend line that's inclining right through almost the middle of this channel that we're in the SPY. You'll notice that every time prices come into this area, prices reacted to this trend line. So today we touched at the very high today right on that trend line. So that trend line showing to me right now that we at least have resistance. We just don't have a lot of institutional support selling at this particular level. And right now, again, Santa Claus rally is just pushing the price higher.
All right. And I just wanted to ask you a quick question, Drew. So you talked a little bit about the Santa Claus rally and how the institutions kind of take a break for the holidays. So with the new year coming next week, What historically happens when the institutions come off break? What can we expect to see on the S&P based when those institutions come back after the break?
Yeah, good question. When we come back, what typically happens is then we have a much larger field of participation in the market. So usually whenever we have a continuation of momentum, that will then help us determine which way the price action is going to go. Since we do have conflicting stories right here, it's a little undecided which way we're going to go, if we're going to continue putting pressure down or if we're going to get a last little bit of a rally up. It's still kind of right there in between, and it's hard to really pinpoint which way we're going to go. For me now, though, this big red candle is what defining the markets. Once we get that volume and participation in January, have we already eclipsed this area? If not, we very well could see that volume come in and kick price just a little bit lower because, again, we made a lower low on the charts. And this is so powerful. This is just basically, it's like a crack in the ice, if you will, to the markets because we haven't made a lower low all the way back since August 5th. And so this is very important to at least keep in mind for a future trajectory of the market. All right, so we flip over to SMH. The SMH is one of the leading indicators for which way the markets are going to go. When the semis fail, you better bail. It's a very common saying that's out there in the markets. So what do we see here on the daily chart of SMH? You see what I've done. I've got some trend lines that are holding price down. This trend line connected from pivot high to pivot high. We kissed it right here. We're making another attempt to go back up. But if you look right here, this pattern right here on the charts is a bull flag pattern. And this bull flag pattern has a measured move up all the way to the all-time highs. So should we get more momentum in the new year when the volume comes in and we eclipse that area on the spiders that I highlighted, the likelihood that we're going to go back up to this all-time high increases. So keep that in mind. We won't go straight up there. We will have resistance levels at 262.11. Should we break, it should look almost something like this. If it goes up into resistance, comes back, retraces, and then kicks up higher. So this is just one of the many patterns that I'm seeing on SMH. And right now it's a little conflicting, so we have to determine and be prepared for whichever way the markets are going to go. All right, so next chart up, I've got the 10-year. And I mentioned this to you last week, that the 10-year, we have a head and shoulder pattern on the 10-year yield. This neckline right here, oops, a little technical glitch. This neckline right here is being violated. Price or the level on the 10-year yield is pushing up through this area. This is a failed move now down here. So whenever you have a failed move, usually you'll have the biggest moves in the opposite direction because this whole inverse head and shoulder pattern was telling us we were going to have a 10-year yield down here at 2.931%. Obviously, we're not anywhere close right now at 4.599%. So with that being the case, and let's check out the DXY chart real quick. On the next chart up, you can see the DXY, this is a dollar. This is also something that I went over with you last week. I told you and I highlighted our parallel channels and the dotted area in the parallel channel that forms resistance. It helps me validate my parallel channel to make sure it's a good one. We can see here over the last few days, we had price come right up in here into this middle area of the parallel channel, which I said would be resistance, and sure enough it is. It's now coming back down and then curling back up to another attempt to go here at the dotted line. Resistance we have at 108.974, but should price go through this, the top end of that parallel is going to be where price on the DXY goes. All right, and then following DXY, we've got the gold chart. And the gold chart is really not too much happening today. We see, and we've discussed this trend line right here that gold needs to break. We do, if this trend line breaks, we do have a measured move right down to about $2,350. So we have that move still intact, but gold is staying strong, holding this trend line. We're trading right amongst it right now. We'll see in the coming days how gold reacts, if it continues moving up or if we have a fall down on gold. All right, next up, silver. Silver also is not really doing too much today. It's very flat. And again, it's Christmas Eve, right? So we can't anticipate too much. We do have this downsloping trend line that will be resistance on the chart. Support here is still at $28.23. Even though we got close, we still should anticipate a little bit of a bounce should price come down in here for silver. And this next one on MSTR, I really wanted to highlight a couple things with you guys. This, if you look at you may or may not know, MSTR, it doesn't trade tick for tick with Bitcoin, but it has a lot of correlation with Bitcoin. And the reason being is MSTR has a huge stake in Bitcoin. Michael Saylor has bought, and he's gone on the news, and he hasn't been candid about it. He's just been straightforward, just hand over fist, buying Bitcoin, buying Bitcoin. So sometimes when MSTR may go up or down, you can look at Bitcoin, and usually it's going in the same direction. But again, it doesn't go tick for tick. So on this MSTR chart, what we have that's formed here on the daily time frame is a bear flag. You can see this highlighted right here by these trend lines. So over the last several days, we've been trading in this bear flag. And you see what happens from bear flags. We had price break down. Now, when price broke down, it went straight to this trend line area of support, roughly at $323. So, and you notice here, we had a great bounce up. And as I mentioned to you before, Bitcoin is up about 4% today, so it's having a good run. And thus, MSTR is also up today from where it closed yesterday. Now, it's important to note, though, if this bear flag pattern matures and plays out, it does have a measured move target that brings it all the way down to roughly right around 250, right around this area. And I did want to point out that right here, you'll notice where MSTR's value is on the chart. This was November 8th, and Bitcoin was at $76,000. So should MSTR fall and this bear flag pattern play out further and go down, you can almost anticipate Bitcoin will be falling as well. Maybe not all the way down to that 76,000 when MSTR reaches that level, but Bitcoin will certainly be under pressure when that happens. All right, so next let's go to Bitcoin and take a look at that chart too. And we can see, kind of like I was mentioning, we have the support area right here at 75. So should MSTR, that bear flag pattern play out, this is likely where Bitcoin will go. Right now, you see, though, Bitcoin is fighting its way back up, getting above this inclining trend line, in essence, getting right back into this wedge that's been created on the charts. Now here, we have resistance, as I've highlighted before, 107, 536. We've already pierced that level. So should we start trading back in here in the oncoming days, which I do anticipate, because over the holiday time frame, it is a little bit lighter in volume. More focus will be on these sort of charts with crypto as they're open 24 hours a day. So we could potentially start to see some price action movement headed up into this area, but then be watching right where the all-time highs were in this 107 to 108 area. That area should form very good resistance, and if it does pierce through there, we don't have too much further to go before we hit our next resistance at 110,000 on the chart for Bitcoin. All right, so, and next up and last is Nvidia, and I told you I was going to mention to you what happens when we have lower lows on charts. So we look over here on Nvidia, and you can go back through any of the charts and see something very similar to this, but you see I've highlighted right here, it's a very small lower low that occurred on the chart from here, because everything to the left right beside me was just moving up on Nvidia, right? So we had this high pivot put in, and then we created a lower low than here. And what happened right after that lower low? You can see we went up 1, 2, 3, 4, 5, 6 days, narrow body bar, straight into a trend line of resistance. And this area is very similar to what we're doing right now on the SPX and S&P 500. We came down, made a lower low, and now we're bouncing back up, retesting where we were on the charts. And whenever that fall and resistance comes into play, you can almost anticipate that a new lower low is going to be made. So we're right here in a middle ground area. Which way are we going to go? The holiday volume isn't really helping us determine that, so I'm really anxious to get into January, but at least right now we have a pretty good idea what's going to happen in the markets, especially the SPX, now that we've made a new lower low. Now, should Nvidia continue higher, first level resistance is right here at 142.94, and then likely this area of the wedge will then be retested, especially if the SPX is going to be coming in. So this is all very powerful stuff. It involves time counts, resistance, and speaking of which, I have a great announcement. I've got a new course that's just been released this week. It's called Mastering the Overnight Trade, with a trade I like to call the sleeper hold. I put a ton of work into this, and what I've done is I put a major emphasis on time, support, and resistance. So if anybody out there is interested in learning time counts, understanding how these markets flow, please do yourself a favor, get this course. It's going to help you pay for everything that you bought over the holidays for your friends and family. So it's a great idea to go ahead and do that.
Yeah.
All right, Lawton?
Yeah, and I'm really excited to take that course myself, Drew.
Yeah, awesome.
But anyways, so if you guys remember last week, we did the first video for Legacy Network. I'm really excited to show you this next video. Thank you to Legacy Network for sponsoring, and I'll tell you a little bit more after this. Alright guys, I'm going to try out my first lesson, what is a business mindset. So it looks like there are 7 parts, and then I'm going to show you guys the first mini game. Okay, this is interesting. It gives me practical ways to exercise. So it's not only giving me information to learn in my brain, but also gives me the tools to go out into the real world and take action. But what we're here for is the mini game. So let's see. Alright guys, so that was me playing the game. I mean, I got 100%. Hopefully I do as well on the later parts, later sections, but definitely go check out Legacy Network and get in on the game. Yeah, so that was my first time using the app, taking a little mini game for Legacy, and what I really like about the Legacy Network is it's totally free, the Academy, and I was able to learn pretty high quality information. I mean, I went to business school, I have a master's degree in business, and a lot of those principles were the same things that I was learning in college, and it's totally free. But thank you again, Legacy, for sponsoring us, and stay tuned for the next video in that series. All right. So with that being said, guys, thank you so much for joining us on Trading the Close. My name is Lawton Ho.
I'm Drew Dosick.
And once again, we want to wish you and your family a very happy holiday. Go check out his course. Make some money.
Yeah. Get yourself another tool for next year, guys. Have a great one.
Take it easy, guys. Bye-bye.